You have your business idea. You want to raise the funds for it. Now is the time to consider, what do you need to prepare? What kind of questions will people ask? What should you actually be discussing through those conversations as you pitch someone your business idea? This is the first video of the series of videos where I'm going to cover specifically the questions you're going to be asked, the kind of topics you should cover, and the kind of potential materials you need to prepare through every different stage of the investment, starting from the pre-seed today all the way, if we're talking more serious B, C plus investment, more mature type of investment. Let's jump into it. These are the questions you should expect. In my prior video, I went in depth on a lot of these questions because we're talking specifically about friends and family round, which is usually coincides with the pre-seed, which can be technically the same exact thing, depending whether you're asking friends or family or you're asking some angel investors or potential VC company. So I'm not going to spend too much time repeating the stuff I already went through in the other video. Just go 1 week back from this video and check it out. But from the perspective of like very high level overview, you need to talk about, okay, what is the idea of the product or service you're trying to create? You need to cover those at least in enough of level of detail so they understand what you're trying to sell to a potential customer. What problem it solves for is an important question because you always need to have something that's going to resonate with the audience, like with the video, but in this case, you're resonating with the product, right? Audience comes to you, they want to be educated, entertained, or informed. Similarly, with certain product types, your potential customer is there because they have a need. What kind of need are you addressing? And if it resonates and it's an easy to understand, it's going to be much easier for you to talk through it. If it's a little bit vague, maybe it's a new area that you're discovering, or maybe you actually don't have yet the product or service targeted at the right audience. So something for you to consider. Who is it for? Again, hopefully it resonates with the audience that you already have. That's a much easier pitch for you as a creator because hopefully you have thousands, tens of thousands, hundreds of thousands of people watching your videos. And that's the same type of audience that's going to potentially consume that product or service that you're raising the funds for. If there is a disassociation, if there's difference in those two audience, very quick and easy question that might torpedo your entire pitch would be, okay, but you really know that audience that watches your video. Why are you going after those folks who you don't know, you don't address, you potentially don't even have in your audience, and you're not trying to sell them a product? It's okay to do that. You just have to have a strong pitch of why you think it's going to work. And that's where the next question comes in, why are you the right person to do this, right? Do you have certain skills, familiarity, you've worked in that industry, you have a very unique idea that no one ever have attempted, and this is why you're doing it, but you have to have a very strong kind of core tenet to this business that you're trying to pitch. How much money you need? Obviously, never go into this meeting without having an idea, right? Whether it's a small round and you just need a 50 grand check, or it's a larger meeting down the line when we're going to be talking about millions of dollars that you potentially need to raise, you need to have an idea how much you want. And I'll jump a little bit forward, but also, okay, how do you actually planning to use that money and how it potentially give me the return, right? You always need to have some sort of a time, even if it's a vague idea, even if it's just hey, I think this is where we're going to allocate, but we're going to take this 50K that you're going to give me, we're going to spend 10K on a prototype of the product, we're going to test it out, and depending on what we find out, maybe we're going to spend more money on prototypes, or maybe we'll realize the prototype is great and we're going to push it to kind of a first round of production. Again, you need to have a theory and hypothesis around what you're trying to do with this. And this is where kind of you build up, although you don't have to be very reaffirmed in terms of what the future will look like. You have to at least show you understand the direction of travel. Hey, we're going to go from this prototype, we're going to go to prototype number 2, prototype number 3. We're going to start selling it through the stores, and we're going to be in Walmarts and Targets of the world and Carrefours of the world internationally. And then from then on out, we're going to do X, Y, and Z, right? Will all of it happen? Probably not, and it's absolutely fine. Mature investors, they understand that as well. They understand that this is just a direction of travel. It's the best way I can describe it, kind of how I talk about career. It's never a straight line, right? It's more, if you imagine navigating a big city, you have this tall building somewhere in the distance and you know you need to be there. That's your goal. But you don't know what the road's going to look like. You don't know if there's going to be roadblocks, or there's going to be potholes to jump through and things like this. But you will kind of continuously navigate through the streets in a zigzag pattern while still maintaining your eyesight towards that goal. Similarly to the business ideas. It doesn't have to be very affirmed plan. If you do have it, that's awesome. but you also have to have some flexibility and leave room for things to change, for the market to evolve, for you to discover new information as you raise the funds and try out in that particular business. Kind of like, again, bringing back to the content, very identical to how you probably navigated the content world, right? Like you had an idea of the videos that you wanted to make, you started making them, but then you realized like, hey, I kind of like it doing it a little bit this way and a little bit that way. And you've adjusted yourself and you kind of like created something unique for yourself. Business is identical to this. You just go through the motions within the commercial world versus coming up with video ideas and making, short form, long form videos, or potentially podcasting, depending on whatever the content type you create. And then from then on out, you really kind of like talk about, hey, if things work out, what it's gonna look for me as from the perspective of the payout, from the perspective of maybe equity that I own, things of that nature. And if it doesn't pay out, if it doesn't pan out, what it's going to look like. Are you going to give me my money back? Probably not if you don't have inventory, right? So you have to be clear about those expectations, because this is the kind of risks that you're trying to help an investor understand before they walked into this kind of a meeting. And now that we covered potential questions for you to expect, this is you essentially, the best way I can describe it, imagine you're a presenter, stand-up comedian, and you have kind of like a set of jokes that you want to go through, and depending on the audience reaction and what the vibe is in the room, you might change and shuffle the order of those like key cards that you have in the pocket, the kind of jokes you roll out. Similarly, when it comes to business pitching, you want to prepare for all of those questions up front, but those are not necessarily things you should aim to discuss if you have an opportunity to influence the flow of the discussion. What you should be planning to discuss are these items, in my opinion, and again, my subjective vision for this is that from the big idea perspective, you always want to have that pitch, that elevator pitch, that if you walk into someone, right, like famously as an example, if you've never heard the definition of elevator pitch, you walk with a potential investor into the elevator, you have anywhere between 15 to 30 seconds, depending on how far in that elevator you are going. Can you explain in those 15 to 30 seconds the idea behind your business? This is it. This is that pitch. This is what you need to refine and make sure anywhere you meet, because you potentially might meet an investor in a coffee shop, you might meet them at some event, they might reach out to you and someone introduce you and you have this passing conversation. This is the must. Whatever you're building, you should have that boiled down. You should be like, I can wake you up in the middle of the night. You can give me that 15 to 30 second pitch of your idea. Now, coming back to some of the questions we discussed, and that's an important item to cover, you always want to have some sort of explanation of the problem that you're trying to solve. Without the problem, when there's great ideas seeking for a problem, that's one of those first red flags for the investors that they say, hey, you might want to go and like experiment, use your own money, experiment with the idea, prove to me that this is actually the problem that folks are trying to solve, and then bring it back for me to consider an investment, right? And there are plenty of ideas. For example, even I personally, I've came up with, and I'm like, hey, this can be a cool thing to do. And then you start asking people, you start researching, and you realize you have a cool idea, but there's not necessarily a market yet for it, right? And so you kind of like put it on the shelf and you say, okay, maybe when the opportune moment comes up and I see that the market evolved, I might pull that idea off the shelf and try it again. So you have to be very like brutally honest with yourself. Do you have a great idea, or do you have an actual problem you're solving for? And if you do have a great problem to solve for, this is where you need to have a very kind of like explanation. And for a lot of these, if you're curious to see, I have 2 videos that I've made, one overviewing kind of like the pitch that Emma Chamberlain had for her Chamberlain coffee. And I also did an overview of Mr. Beast's pitch when he was pitching to General Motors. Look at those videos and see how they build a narrative, because that's very similar. What I'm suggesting here is that you should have that narrative built like, hey, my big idea is blah, blah, blah. The reason why I'm saying this, because this is what I'm seeing. The users are struggle with X, Y, and Z. And since they struggle with X, Y, and Z, and I have expertise in this area, I think we can solve it with A, B, C. And this is kind of like the flow of you set the stage with a grand idea, you gave some details about the problem, and then you mirrored it to the solution that you're offering. And this is kind of like naturally then flows into the conversation of the target market, right? Like how big is it? And you can run the stats, the beauty of the internet, there's a lot of information. Just make sure you cross-verify a couple of times, especially when you're pulling like numbers of potential customers or billions of dollars of revenue in a specific industry, because depending on methodologies of the research, you can sometimes look at like creator economy and you'll see some researchers quoting $600 billion industry, some research quoting $30-40 billion industry, right? Like 20x gap. So you want to really understand which one you use. And my rule of thumb usually, not everyone will agree with me on this, use a more conservative estimate. you risk a lot less from pitching your idea from the position of a more conservative estimate of the size of the market, because people cannot poke holes at it, right? Like if I look at the range of the creator economy, 30 to 600 billion, if I'm building a business that addresses that entire industry, I'm going to use 30 billion. And I'm going to say, hey, I'm going to get like 1% of that industry, right? So basically 1/100th of it. And this is my total market, and kind of like this is what I'm trying to do. So people now level set on that more conservative estimate, and sure, that might limit the amount of money you're raising. But really, the total size of the market matters at the later stages of the investment, when people throwing at you 50, 60, $100 million checks, right? Because they need to understand, hey, if I need to 10x my $100 million investment, I need to at least see $1 billion in return. If the market overall in its entirety is only like $2 billion, that means that the assumption is you're going to corner 50% of the market. That might be very unrealistic, right? And so for the investor, they'll be like, hey, no, I'm backing out because I'm not going to make 10x on my $100 million investment, right? And you're going to have to go and negotiate kind of like this part. At the pre-seed stage, it matters a lot less, but you still want to give an idea, because especially if it's a mature investor and they cut 50K check to like say 100 companies every year, for you to be one of those 100 companies, it still need to be attractive enough for them. But that's where the conservative approach may backfire. But at the same time, again, my general philosophy, I'd rather your investor to be like, no, you're wrong. It's not $30 billion market. It's $60 billion market. Okay, cool. Then I guess you're now convincing yourself to invest in my business, right? Where if you come in and you roll and you say, hey, it's a $600 billion business, and investor right there can quickly Google it on the phone and see like, dude, it's like you're overestimating your market. All of a sudden, they're going to question every single other data and assumption in your deck, in your presentation, whichever way you're presenting it. So again, when in doubt, always go more conservative with the numbers. And this is kind of like what it informs, to come back to specifically why it matters, is that once you have the target market, mature investors, even at the pre-seed stage, in their head start calculating, okay, if this is going to grow at this clip to this particular level, how big of a market share it needs to be. And whenever you, as an investor, you have a great product with an interesting big idea, with the right problem to solve, and for it to be successful, it needs to have like 1% of the market. That's a very interesting and attractive investment, because 1% of the market is a very small assumption, and which means that if you just get 2% of the market, all of a sudden you double the valuation of the company. Again, all more complex metrics aside that we're going to revisit in the future. But this is why it's important. And this is where kind of like once you set the stage, one of those interesting questions come up is, okay, but why do you care? Like why you are the person, right? We had the question on the prior page, but the angle here is a little bit different, because here you're actually presenting your personal why. Like for me, for this channel, my personal why, I've been disappointed so many times seeing, it's actually started even outside of creators. It started for like athletes, but now it's creators, seeing how very talented people, much more talented than I am, have those opportunities to make millions of dollars, and they just waste the money by investing in terrible ideas, being mismanaged, managers, accountants coming to them, pitching wrong things, just draining them of their funds. And all this hard work for these talented people just completely goes to waste. And the idea behind my why became, screw that, I'm going to help fix it. And now I make videos explaining this kind of terminology and educating creators, educating folks out there, because my goal is, don't spend money. You don't need to buy my course. You don't need even to pay me. Just learn all of these things. Be educated. When you walk into those rooms with those managers, with those investors pitching you ideas, I want you to be able to independently go and question their assumptions, poke holes at their business ideas. Make sure that you are educated and you're thoughtful about how you spend your hard-earned money. And this is my why. This is why I do this channel. This is why I make these videos and kind of like host this channel. So you need to tell that kind of a story. Like, what is your personal why? What is that connection that even if this is going to be hard, it's going to be challenging, you're not going to be reaching all your targets, you're still going to be pushing forward. You need to be able to explain those things. And the more passionate that story is, and you're a storyteller, if you're a creator, you know how to tell the stories, the more you kind of like can entice. Think of it as almost like a video that you're creating, or a very enticing article that you publish on your newsletter or a podcast, right? Like bring them into that story, lure them kind of like into this discussion, help them understand it from your perspective. And that alone sometimes is enough, because many of the investors at early stages will tell you they will invest more into the founder and then the business idea, because they understand how hard it is to find people who are passionate and really understand the market. Even if the first idea doesn't work out, they're willing to bankroll you for a couple of more ideas until you together find the right business opportunity. And from then on out, you kind of like can talk about a few other things. Team, if you have folks that you're working with, maybe it's a business partner, maybe it's someone in your network who is very familiar also with the industry, but they're not a creator. The more interesting kind of like collaborations, advisors you can bring to the table and show, hey, I'm not just running it by myself. Like I actually have a network of folks around me who are willing to participate and help me make this thing work. That's going to give them confidence. Obviously, use the real people. Actually talk to those people before and say like, hey, I'm going to put your name out there. It's going to be on that slide. I'm going to refer to it so that the investor, if they decide to reach out to that individual, say like, hey, so-and-so pitched and told me you're part of this business. They should be able to talk about it, right? Like again, a lot of this information, especially early on, because of the amount of great ideas that are out there and the amount of folks who are pitching their ideas to the investors, trust is one of those cornerstones that you should never betray. Like even I'd rather you skip the meeting and tell the person, say, you know what, I know we have a meeting. I looked through all these materials. I realized like I'm not ready. I don't think I have a fully baked idea. That will play out for you better in the future because the person will understand, yes, maybe I'm disappointed. I wanted to hear that pitch, but the person is backing out. But at least you're being respectful of their time. You're being very transparent and trustworthy. So the next time you're going to call for the meeting, they'll be like, I know this guy will not waste my time. Because of this, similar for the team, for all this information, always make sure, even if it's informal, it's trustworthy. Never give an opportunity for folks to question your assumptions and question your kind of like ultimate goal. Then, as I mentioned earlier, think about how you're going to be using your funds. Again, we spoke about it, so I'll skip this area, but have a plan. If you're asking for 50K, be able to explain down to $1 potentially, or at least like round up to like the next first closest $1,000, how you're going to invest it. And coming back to the earlier point, talk a little bit at the close vision for the future, right? If you look back at my overview of Chamberlain Coffee deck, in that they were talking about, hey, and we're releasing this matcha product, and there's like, this is where the market is, and matcha will add like an extra, I think, couple $2 billion to our total addressable market. This is what we can do with it. You should be able to articulate it as well, even if it's in the very general terms, right? Like, hey, I built this product, but if things work out, I think there's enough of a gap where this product can become XYZ. Well, do you need to agree on this future? Do you need to like really fight for this future right now to prove it to it? Not really. What you're currently trying to get out of the meeting with the investor is a yes to a certain number of dollars that you're trying to invest, and you have very clear parameters from like use of the funds, what you're going to achieve. That's it. Like that's the line. Anything that's future forward looking, especially beyond that initial, say, 50 grand, $50,000 that you're raising, is aspirational. And you want to show aspirational, kind of like similar to the big idea that you have the vision for the future, but no one's going to hold you necessarily accountable to it, because especially if you're dealing with someone who invested into enough businesses, they know that a lot of these things change so many times. One quick example I would want to share with you is like Slack is a great example, right? If you never heard that story, Slack, which is like a messaging software that a lot of businesses use to kind of like inter-team communicate with each other, it was never planned to be a standalone product. Originally, it was, and I'm forgetting the name of the company right now, it was essentially the company that was making MMO games, right? Like massive multiplayer online games. And they've been kind of like making games, and they've been trying things, and they were like, okay, they were not really super successful, but their engineers were very talented. And one of the things that they were trying to solve for is inter-team communication. And they just built this software for their own team, and they're like, hey, let's create these channels and be able to like, message each other and whatnot. And as they realized that, okay, people are not getting excited about the game, but people who see our internal messaging system, they get pumped and they're like, hey, can I have that? Like, where did you get that? Like, I want that messaging system. And so they pivoted and they said, let's try to create it. And they essentially went and started offering that internal messaging tool as an external product. And all of a sudden, I think 10 years later, 12 years later, they're selling it to the sales force for $6 billion, right? So if you ask them back then, 10, 12 years ago, right, whatever the time was, they will probably tell you, hey, we're going to make the next World of Warcraft. Like, we're going to make this big, massive online game. They were not saying, hey, we're going to be leaders in the inter-team communication and messaging, and companies like Microsoft will copycat a bunch of our features because that's how progressive we are. They would never tell you. And similar to you, you can say back at that point, hey, this is where I think the world was heading for my business. In reality, 5-10 years from there, you might be a completely different area. But again, if you create a multi-billion-dollar business, I don't think you'll be disappointed. And finally, we have to talk about, do you even bring any materials to it? Which is, for the pre-seed, is an interesting topic. Simple answer, not much of this really matters, to be honest with you, at this stage, because again, you're dealing with a very young idea, very much kind of like idea that's slowly gaining traction. Maybe you're raising again funds to prototype it, to experiment with it. So I always like, again, as much as people hate decks, slides and decks, and so in my video, sometimes they're an easier way to kind of like create a narrative and walk people through something which is more of like a text-based communication, right? If you have some visuals and things of that nature. You can have like Amazon style write-ups as well, which is like 2-3 pager, which outlines all of this, but instead of having individual slides, it just outlines it in sections on a single document. Sure, use it. In my opinion, at this stage, either honestly works just fine. Just again, consider the length. Don't be like a person with 100 slides deck, because again, at these stages, elevator pitch is about 30 seconds max, and anticipate you will only have about 10 minutes to 15 minutes to talk to an individual about your business idea, because usually it's kind of like the top of the funnel for any investor, those kind of like pre-seed conversations. So they're not going to spend 1 hour talking to you about it, unless you're like big enough of a creator that they might just want to create the relationship and get a better feel for you. Anticipate 10-15 minutes is all you get, and my usual assumption is 1 minute per slide is as much as you're going to get from the presentation perspective. So that's where the idea is 10 to 15 minute slides max. Keep it as lean as possible, because right now you're trying to get those big ideas out, the problem and the solution, the size of the market, and why it matters. Definitely, again, business plan. You're not going to walk them through it. Definitely don't walk them through it. Please don't walk them through it. Have a business plan in case they're asking and they're questioning your assumptions, so you can pull up and say, hey, here's a spreadsheet, and here's why I think that $50,000 will last me whatever I'm saying, right? Because maybe, say again, you're making physical product, you already spoke with the potential factories, you prototyped, some sort of like a cost estimates. You have an idea of like, hey, here's how I'm going to use it. If you need some legal fees, you already spoke with the attorney, they already quoted you for the amount of money they're going to charge you. Show that. Right? Have that somewhere in the back end. Show that if they question your assumptions and explain them, but don't lead with that. Lead at this stage, you're trying to sell the vision and the story. And that, as I said, first gate step of let me get those $50,000 as an example again, right? And get to that first gate and have some success criteria to it. Like, hey, the success would look like we sold X number of things, or we had a successful beta test of this product, whatever that might be. Have that, but it's as far as you go. And then business plan kind of like helps you justify how you're going to get there from the financial perspective, right? Talk obviously about personal investment. Again, investors like to hear that you're putting your money where your mouth is. Obviously, you're going to spend your time, you're putting your brand on it, but it's always an attractive environment where, say, you're asking for 50,000, but maybe so far you also invested something like $50,000 right into this idea. It's always important to show that you really believe in it and you have some skin in the game. But again, not a hard requirement, because I also understand in some of these cases you might have an interesting idea, you might just not have the liquidity to go and invest $50,000 of your own money, but at least show them that, hey, I had a consideration. Here's why I did not invest personal money, because it's maybe unaffordable for you right now, but you have all the other parts that we just discussed earlier buttoned up. You have the story, you have the vision, you know the market, you know it's going to be successful. That will be enough. So it's not a disqualifying factor if you didn't invest personally. But if you did, definitely, pat yourself on the back for that one. Any kind of like, again, letters of interest, LOI, that's what it stands for, letters of interest, or any kind of like early commitments is always nice. And it can be in the form of, say, you have a potential service that can be offered in some popular store chain, and you actually have some relationships, and maybe you have enough of a pool where you already spoke with them and they gave you some pre-commitment. And again, pre-commitments are usually not legally binding, and that's the danger of those, but at least show them that you actually had conversations and people were excited, right? Maybe it is you're creating a product for a lot of high net worth individuals and you think you're going to be very successful with it. Maybe show some quotes and be like, hey, I actually spoke with this and this individual, and they told me that if I give them this product, they're going to go and buy it from me immediately, right? So show it. Again, trust is important. Don't put stuff there that was kind of like, oh yeah, it's nice, and that's all that person said. Only put it in if you actually had a conversation or you had a survey, right? Like you had some empirical data that can support the fact that it wasn't just some fluff that you came up with. It was an actual idea, an actual conversation, an actual pitch that then resulted in the person saying, hey, get me that prototype, I'm going to buy it. That's always a good thing to share. And again, basically the understanding in the sense of, what are you doing here? Are you raising debt? And so you have an understanding that because of its debt, there's going to be interest rate and going to be interest payments you have to make. Is it an equity? So then do I owe part of your company? How how big is that part of the company that I own, what's going to happen in the future round of investments, right? Might come up. It's like, hey, is it dilutive, not dilutive? We're not going to talk about it yet because it doesn't really come up that often. And early investors understand, even if they own like 10% of the company or 20% of the company, thanks to them cutting the first check for you, they will also understand that in the future rounds, they're going to be diluted down to like maybe 5% or even like single percent digits, right? Low single, like 1% of the company. But the pie will grow, right? Like if right now, based on all of your estimates, you have $1 million idea, they own 20% of it. So their total value is like $200,000. If things work out, you do everything right and it becomes $100 million business, but they only owe 5% of it, right? Like, so they basically now owe just a fourth of what they used to, but that fourth is now off of 100 million, right? So all of a sudden it's a $5 million check, kind of like cut of the business that they own. So just have some rough ideas. Like tell them what they will get for putting money into your business. And that's it. So for the pre-seed, it doesn't usually get more complex than that. If people try to drag you into like more complex discussion, again, your research should always be you have a very clear goal of what you're trying to achieve with this initial investment, right? And as I said, don't go crazy. Don't try to raise millions of dollars for the pre-seed. You're testing the idea. What is it? Why is it important? What kind of solution it is? Who are the people that are trying to solve that problem? And how you're going to get to the point of actually leveraging the money in an effective way, right? Like ineffective ways are things where you spend the money that doesn't give you any new information. This is why it's important for the investor to see that you're actually seeking new information. New information meaning it can be, I have an idea, I spoke with a bunch of customers, I think it's going to work, but now I want to build a prototype and actually try to sell it. If you're successful in selling it, that's new information. If you're unsuccessful in selling it, that's new information. If you failed in the prototype stage, it's a new information, right? Like, so there is new information that you're gaining thanks to the investment of money that you just got, because and we'll talk about in the next video, once you go to the next stage of the investment, you should have some information about the commercial success and potential of it. It's no longer going to be, hey, I think this is the size of the market and I think this is where I'm going to be if I sell and I'm successful. No. At that point, you should be able to say, hey, we've done this, this, and this. This was successful, this was successful, this wasn't successful. So we're raising more money to go and test against those successful things and scale them up and potentially make this much of money, right? So you're going to essentially move, if the pre-seed is more of kind of like evaluation stage here and no one really expecting you to make any revenue, in the next rounds, and we're going to talk about, you start to have some revenue expectations, but mostly as an indicator, as a proxy of the fact that, hey, you actually have something that people are willing to pay for. And in the future stages, there's going to be real expectation. Hey, you need to be able to make money with this. And further down the line, when we talk about the most mature investments, hey, you actually need to be profitable when you're doing this. So we're going to talk about all of this. We have a few more videos to go through. And then afterwards, once I'm done, I'm actually going to kind of like piggyback a little bit on some of these conversations, but we're going to talk about specific metrics, terminology. There's going to be like things like you saw LOI, what is that? Was it equity? I spoke about it in the prior videos, but also in things like metrics, IRR, what are they expecting? What is ARR, MRR, all of this fun stuff that you might hear. But again, I'm going to sprinkle them in through some of the conversations, but I'm also going to have a dedicated couple of videos specifically talking about just metrics and terminology. Because again, people like to confuse folks like you if you're new to this world, and they try to show you how smart they are because they know all this terminology. And this is why you should be giving them a bigger share of the market. Bull. This is why we're here. We're going to have this video series. By the end of this video series, you will understand every single investment stage, and you will also know the terminology, and you know how the metrics are calculated and what some fake stuff that people try to throw around this metric, so you know kind of like what the pitfalls are. And hopefully by the end of this entire series, you will be very confident when you're raising the funds for your business. I hope you enjoyed it. Let me know in the comment section below if you have any other questions. Otherwise, I'll see you next Saturday with the next round of the investment stages. Peace.